So April 30th is coming soon, and so here's where I want to talk about where are rates, where are we going to be looking over the next four to 6 months on rates. So people, if they are getting back into the market, if somebody is saying, well, I want to give into a house and here's the tax credit, but then I also have capital gains thing to worry about. Capital gains says I need to live in the property for 2 years out of the last 5. Make sure that they're thinking about that, of living in that for at least 3 years, because you're going to have this overlay. Because I can foresee a lot of repeat buyers or first-time buyers saying, gosh, I'm going to grab this property here at today's rates and today's prices and turn it into an investment property when I'm ready to move on. So I think it's our responsibility to give them good counsel when they're thinking about that. Because what we're seeing, if you guys know, obviously the feds have announced and made it very clear they're done buying mortgage-backed securities as of March 31st. Is there speculation they're going to continue? Sure. But right now I think we need to play it safe, and as advisors tell them, well, this is what the plans are and what they've announced. And if you look throughout 2009, the feds were purchasing on a weekly basis in the upper teens, low 20s billions of mortgage-backed securities. So it's a supply and demand question. They're going to pull out of that industry or that market. What's going to happen? It's going to have to stabilize. The rest of the investors are going to have to say, okay, do we want to buy mortgage-backed securities? And if we don't, what's going to happen is we're going to see mortgage-backed security prices go up, and we're going to see rates follow up accordingly. So they're doing a good job of phasing themselves out. We're already seeing that the feds are buying mortgage-backed securities in the $9 to $10 billion range. And I think we're going to see that over this next quarter as we head into March 31st. We're going to see rates start to go up slowly. So then the big question mark is, what's going to happen after March 31st? Is it going to be this huge jump like we saw in November of 2008 when they went from 6 1/8 to 6% down to 5%, and then it trickled down lower? That remains to be seen. I think it's really going to depend on what's happening with unemployment, inflation, and kind of how the rest of our economy is stabilizing. But inflation, as you know, is the big scare out there. So again, I would play it conservative and say my estimates are the rates are going to go up. How much up, I don't know. I've read a lot of stuff that we're going to stay in the 5s, but I would not be surprised if we saw rates go up into the 6s. So that's going to happen at the end of March. We've got another month after that. So what do you advise your clients? Well, again, make an offer sooner rather than later. Why are you waiting? What is it that's holding you up? Why are you try to tease that out of them to really get at what the heart of their concern is, and then consider making an offer so they can lock in their rate as soon as possible. What I'm pushing my lenders and what I think we're going to see with lenders out there is instead of a 30-day lock, we're going to see 45, 55, 65-day locks in order to take advantage of today's rates on an offer that they've made and kind of span that through April. What I've seen over the last year, and I've been riding this roller coaster since things really started heading down, and this is, if you guys have noticed it too, rates will always slowly go down and then spike up. So it's always my advice when somebody asks me, well, should I lock it in today? Well, do you like today's rates? Would you like it if I called you tomorrow and it was 5 1/4? Well, I really want 4.875. That might happen over the next week or two, but really more likely is you're going to see 5 1/8 or 5 1/4 just like that. So I think what I want to do is try to get through the rest of this to put the whole package together and say, okay, here, Mr. or Mrs. Buyer or first-time home buyer, you can buy this house. The government's going to pay you essentially or give you all this incentive to purchase the house. And here, can you really do it? What's the benefit of home ownership? And so going back to our model home or our example home, the $174,990, home values. I've done the research, and even over the last 20 years, despite the 12 and 18 and 20% nation average that we've seen in decreased values, over the 20-year period, it's still an average of 3%. So being the most conservative possible, 3%, the home is going to increase in value over the next 5 years, $27,000, almost $28,000. So it's our job to communicate that to your buyer to say, look, it may not do it today, may not be next year, but if you're looking at the long term, this is an asset. It's going to perform for you. So how is this going to affect your net worth? So let's go back to the renter, the first-time home buyer. They are throwing that, what was the average? $1,050 a month in rent over the next 5 years. Over that same time period, they haven't changed anything as far as their cash flow, but their net worth has gone up $38,000. I think to somebody who's thinking about retirement or has some forward thinking of, wow, how home ownership is really going to help me create worth. So, and that's the increase in the value of the property along with the equity that they're gaining by paying down on principal. So I just throw this number out there, and by the way, if you wanted to have a net worth of $38,000, you need to save $640 more than what you're currently paying in rent. So let's not, that seems almost impossible for some of the first-time home buyers. Let's just change the way your cash flow is working for you. Some of the benefits, you guys, I'm sure, know all of the benefits of home ownership, pre-qualification. I do give this seminar to first-time home buyers and the general clients, so I throw some of these things about qualifying. Any questions about credit and what's happening with the different requirements changing out there? It is almost daily or weekly that we see changes. One thing I do want to make you guys aware of is the FHA, or the HUD requirement on the good faith estimate. They have, obviously as of January 1st, that changed dramatically. Lenders are now required to send out a good faith estimate, and when they give that quote, it has a shelf life to it. And if I give a quote, once a person has made an application, I have to honor that, which I think is pretty straightforward. You should be honoring that anyways. But you're going to see your lenders become a lot more finicky, I would say, about giving out good faith estimates. And the purpose behind, I think with the HUD intention is good because they have two different categories. One of them is the lender fees. There's 0 tolerance for that to change. The other one is title and escrow that has a 10% tolerance for change. What it doesn't do is provide your buyers with a payment and cash to close. So what you'll see now is more paperwork coming out. It's kind of like the truth in lending statement. It wasn't necessarily applicable unless they had a 30-year fixed mortgage. But if they have any seller contributions, the truth in lending is a moot document. So if you're wondering why lenders might be struggling with sending out a good faith estimate, it's because we didn't really know what HUD wanted until January 1st. Then we all had to scramble to try to figure it out. So to recap, you've got the tax credit. You've got you guys know the market. You know the rates are good. And I think this first quarter and the second quarter, we're going to see an uptick in purchases and offers and business. Go out there and use this as a tool to inform your buyers or to market to your buyers or sellers even how we can use the tax credit to help people make a purchasing decision, along with what's happening with the rates and the market out there. I think it's a great time to buy, and I think people have been saying that for the last couple of years, but I don't know that it's going to get much better than this. So if people are looking for the bottom, now's the time. There's really, with the exception of unemployment, I don't know another reason why somebody shouldn't be buying a house right now. And hopefully you guys see that. I put the website on there. If you do want to check out unemployment for Lane County, I did it as of Monday. It was 11%. I was really encouraged to see that, and that was an non-seasonally adjusted. I saw over the last several quarters it's actually gone down a couple of percentage points, so I thought that was really encouraging for Lane County. But do check that out and keep an eye on that. And that's pretty much it.